Hello everybody, Dadas here and the Dadas Trading System Workshop. Welcome to the next episode of the Trade with Dadas series. Now, first of all, a little word of explanation. There was no video on Friday because I was tired. Yeah, simply, very often people say they don't trade Fridays because Fridays are weird days. Well, I don't think that Fridays are weird days or they are different than any other day. Sometimes, yeah, they could be a bit different because it's the end of the week or something like that. Anyway, but there's another factor. Very often the trader is simply tired. It's the last day of the week, and if you're trading like me and doing all sorts of other things like forums, making films, and talking with people, giving live coaching, so then yeah, you are entitled to be a little bit tired on Friday. And when you are tired, you are really can make a lot of mistakes, and well, something like that happens when people are tired. They simply make mistakes. They can't concentrate. They do something different. Okay, well, what happened today? Actually, today wasn't a very good day for me, even though the market was pretty nice. And let me show you. You see, the market right there was. Well, maybe not so clear on the Dow Jones. It was better on the DAX 30. You see, the situation, the swing at this moment was pretty clear, and yeah, and even the short right here was pretty nice, and it could have been taken, but yeah, okay. I sort of decided to trade today only on the evening session, and I decided to trade the last H4. Yeah, right there, and because there was some distance to the D1, so I decided that there could be a trade on the last movement on the day, and probably or most probably potentially even a pullback all the way down here. Well, unfortunately, I didn't. As you can see in the first trade, we can even zoom this in a little bit more, yeah, to the maximum. You see, on the first trade, I failed to enter at the right price. There was an opportunity to enter right there, and that's where I should have entered, closer to the FIR line, and that's where I should have entered. And of course, I should have gotten out of that trade somewhere right there. Well, I didn't look at the M1, and that's another mistake that I made today. I didn't look at the M1 because if I had looked at the M1, I would have seen that that I should be getting out of this trade. Well, I didn't, and I moved the stop loss already to this level, so that I figured out that this should be a safe level. Well, it wasn't. It took me out, right? So the only next thing to do was to react at around the better price to enter short, and so I did that. I took it again with the same volume, and I got out here on a small profit, very small profit, practically break even. So today nothing really happened. It's a break-even day. And of course, another thing is that somewhere around here already the ending time was the session end time was right there. So that's another thing that I should have gotten out of that trade, and that's it. Simply, basically, it would have been break even as well, because when the price was moving back, I should have simply closed at any profit or at break even. I didn't, so I had to struggle a little bit, and it's soon, it's 10 minutes to 2200 in Poland. Very soon it's gonna be, yeah, in 10 minutes it's gonna be 2200, yeah, it's gonna be 2200 hours. On the broker's time it's gonna be 2300 hours. Then the spread gets wider on the Dow Jones, and things are like it's not worth playing around when the price doesn't want to move strongly in one direction. Now, another thing, some people have already been watching my episodes, and I had this comment on a Polish forum from some person, and he figured out that if I'm showing my trades on the M1, then those trades are just lucky strikes and nothing else. Well, I need to explain something to you. No, my trades are not lucky strikes. My trades are, well, at least in theory, or yeah, they should be done by a certain procedure. And this procedure is a very strict procedure, and I can only, sometimes say that sure, I'm not a perfect person, and I also make mistakes. I also tend to be tired, overworked, and stuff like that. Anyway, under this here label, there is a list, yeah, and it's a checklist. Yes, as you can see, we are trading. We are taking the M15 chart as our lead time frame, but we're also looking at the H4. We're also looking at D1, right? So yeah, we're looking at the oscillator. We're looking at the mini charts right here. There are a whole number of elements that and factors, or otherwise you can say symptoms, chart symptoms, yes, that have to be identified as either buy or sell, or I don't know. And there is no possibility to take a trade unless all of them are in one direction. So in other words, I have to check each one of these, right, to see whether I am in the right direction or not in the right direction. And if I have any doubts, I must have any doubts, or if anything is in the other way, in the other direction, then sorry, but there is no trade, right? And this is the whole system. This is how the system works. It needs further explaining. So in other words, if anybody is interested in this system, he needs to take the coaching for this system. I doubt that anybody will manage with this system if the person doesn't get proper coaching in this system, in the Dadas trading system. So yeah, so as you see, that's why the whole procedure leads to a certain conclusion, and then we go to the M1 to find the trade, find the situation where we can enter the trade. So let's go and have a look here. Yes, and okay, let's do it quicker like this. Let's have a look at those trades again. Now this time let's zoom out a bit, and you can see clearly that I simply made some mistakes, because, well, perhaps this trade wasn't a mistake. The first trade wasn't a mistake. The only mistake was that I should have gotten out of the trade right there, or maybe right there. So like I said before, at break even. Now that trade wasn't a good trade at all. It was something like because that trade should have been taken well, at least right here, or it shouldn't have been taken at all. So yeah, so it was just my experience and my will to get back on this trade, which is basically also a certain no-no, that basically we shouldn't do that. We shouldn't risk emotionally that yeah, we lost, so we have to get back immediately, because yeah, sometimes you might get back, or sometimes you might not, simply because even the time right here is not correct. You see in my here in my indicator we have certain hours of trading, yeah, and since I'm doing the day tradings, then it's like this, and sorry, but there is no way, right? There is no trade, yeah. Yeah. So also you had the opportunity to have a peek at the list of the indicators that I'm using. Some of them are my own indicators, some of them are not. Some of them are simply modified by me, or the idea is somehow used by me in a certain way, in a specific way, and yeah, and this whole thing creates the whole system. So you can see, yeah, you can see that right now the price is going down where I wanted it to go down, because basically the idea was this. So the idea was that the price would go down to here, yeah. Now I don't know if the price is gonna go down to here or not, yeah, and yeah, and you see that it still made some other movements right there, right? But the basic idea was like this. But you know, but the idea of the system is not, it's not exactly like this, because this for the system, this is the full range. In other words, the full range that we within which we are trading. So if there is like let's say 55 pips potential from there to there, then we are trading inside that potential on the M1. So that means we might in the very best situation we might get 55 pips, but we might not. We might get 10 pips, we might get 15 pips, we might get 20 pips. It doesn't matter, because the system is not based on the number of pips, but it's based on the risk to reward and percentage risk. In other words, we're always risking 2%, and the risk to reward is minimum 1 to 1, and usually 2 to 1, sometimes better, sometimes maybe 1.5 to 1, something like that, right? So that's the whole idea, right? Okay, so thank you for this episode. I hope I've explained something or a little bit more. I'm not, like I said, I'm not saying that I'm perfect. I'm trying my best. Anyway, I figured it out, and I know that the system is a very good system, and it really works. I mean, of course, no system works on its own, right? It will only work when the trader will work, right, and do the right things. If the trader for any reason doesn't do the right things, well, we can't expect the whole system to work, right? Okay. Now, of course, somebody might ask me a question. Okay, then what happens in this situation? Let's see. What happens here in this situation if we have a signal for a long? Well, if we have a signal for a long here, then the potential here is like 15 pips, yeah, 15 maximum, 17 pips maximum, right? So if the market is giving us an opportunity to enter right there, well, then we don't have even 15 pips, but we have like maybe 10, 11, 12 pips up to here. That's the potential, right? So so it's only up to us to decide whether we want to take something like that or not, because yeah, you see, the price did get where I wanted it to get. It did, yeah. But on the way I lost, and on the way I made it back. Yeah. Why? Because I made some well, I didn't go exactly by my system, and that's simply it, right? Of course, you could say, why not then risk, put your stop loss right there, and then just simply wait. Yeah, I could have done that, right? Could have done that. I was risking the same amount, yeah, because it's supposed to be, it's 2% from here to here, it's 2%, or and from the entry price. Anywhere you enter to the stop loss, it will always be 2%. Even if you enter here, but you won't get an opportunity to enter here. You will get an opportunity to enter somewhere maximum. Oh, I will have to find that hidden line. Anyways, somewhere around here would be still an opportunity to get into the trade, but then there wouldn't be. That's why we have this expert advisor, which sees to it that we don't take trades that are bad risk to reward wise, right? We understand. Okay. So anyways, so you see, and yeah, now the spread is already 3, you see, so yeah. That's why those trading hours and the no trading hours, yeah. And of course, all we have to do is just stick to the system, because yeah, you see, even by the system, there was there would have been an opportunity to get into the trade right somewhere around here, but again, the time isn't right. Then the time isn't right. See, because we simply want good trades to happen. Also, if you looked at this situation right here, well, the only possibility of entering would be up there, which again isn't a good price, because the good price is somewhere right here. So whatever you say, and whatever anybody claims, right? Well, I say they are wrong, because if they want to make me wrong, then I say the only thing that I can say: buy when it's cheap, sell when it's expensive. Now, you don't know when it's cheap, you don't know when it's expensive. Then I'm telling you, it's cheap somewhere right here. It's expensive somewhere right there. Yeah? But only provided that the price wants to confirm that level as the resistance or as the support. Right? So, in other words, I've created a tool here, right? A little tool. So if you do something like this, you measure this with this tool, and you're getting the support level, the resistance level in this case, right? You're getting the resistance level. So you've got the resistance level, and the price has to respect that resistance level. If it respects this resistance level, then you can get in on the trade. And this is the first thing you do. The first thing you do, you find the resistance, or otherwise you find the support. And okay, you see, you find the support. Now let's cancel that. Yeah, you have the support right here. You have the support right here. You have the whole zone right there. So you can, as you can see, the last opportunity to enter was right there. But the price wasn't good, because the price at this level is like halfway through already, yeah, or somewhere at the top. And as a rule, why? Because it's simply safer to do that. If you understand that you should buy at a cheap price and sell at an expensive price, then you will be much better off than when selling when it's already expensive, or buying when it's already expensive, or selling when it's already cheap, right? And yeah, that is the system. And perhaps you will say, okay, then what am I supposed to do? Yeah, you're supposed to sit and wait till you get the right opportunity. And if the chart doesn't give you a good opportunity, like for example here on the DAX, where the opportunities were much clearer, those two good trades, and okay, you see again, this trade wasn't good, but you had a good trade right there, you had a good trade right there, and that's it. You had two good opportunities in the day, and that's what trading is about. It's not about making 1 million transactions per day, even though some people might be doing that, but it's not about that. It's about waiting the right moment and taking the right trade, or otherwise not taking the trade at all. Okay? That's the only way, because I believe it and I know that it's the only way, right? Even though somebody might not agree with me. Okay, again, thank you very much. Please like, please subscribe, please find me on Patreon, find me on Forex Factory, find me on LinkedIn, right? Find me on any other, please contact me on Skype, and let's make it happen. See you.